Today I answer the question, what's the difference between the prior and pending litigation and prior acts exclusions commonly found in many D&O policies? There are two common exclusions applied to D&O, or directors and officers liability coverage, which have to do with the time prior to the first policy's inception that new buyers are often confused by. They are the prior and pending litigation exclusion and the prior acts exclusion. Let's dig in and see what they're all about. Under the prior and pending litigation exclusion, often called the P&P exclusion, it's common for a D&O underwriter to set the prior and pending date as the inception date of a new policy. This means that any prior or pending litigation prior to the inception of a new policy is not going to be covered. It doesn't matter when the wrongful act occurred which gave rise to the litigation. It doesn't matter if the signatory on the app knew about it or not. It just matters that if there is any prior litigation or pending litigation prior to the inception date of the policy, it's going to be excluded. This exclusion is also known as the burning building exclusion because underwriters just don't want to sign on to a new building policy if they knew the building was already on fire. Makes sense, right? You will see a P&P exclusion on most new policies and when an insured switches from one D&O insurer to a new insurer. The new underwriter in this renewal scenario wants to make sure that claims which may have arisen in the past are filed with the appropriate previous insurers and covered under those policies and not on the new policy. Now, you may be saying, how in the world would this exclusion ever get triggered, or why would it ever be a problem? So let me give you an example of a situation which may cause the P&P exclusion to be triggered. Let's say your company hasn't had a D&O policy in the past and there's a turnover of company leadership. This can happen in a merger and acquisition or in a reorganization. New leadership is brought in and they realize there's no D&O insurance. Recognizing how important that is, they complete a new D&O app, submit it, and the policy is issued. The prior and pending litigation exclusion date is set at the inception, meaning the start of the new policy. Everything seems fine until a lawsuit arrives at the president's doorstep and the leadership team finds out that they are being sued individually for a claim that was originally brought against the entity 2 years earlier, which they had no knowledge of. They file the claim with their new D&O insurer only to have that claim denied because of the prior and pending litigation exclusion. Not that common of a scenario, but it can happen. Now, let's talk about the prior acts exclusion, which is totally different. The prior acts exclusion will not provide coverage if the wrongful act, which leads to a claim, occurred prior to the inception of the policy. The differentiating factor between the two exclusions is that the prior acts will exclude claims after the inception of a new policy if the underlying act or circumstances happened prior to the inception date or the date set by the underwriter. Here we're not actually talking about actual litigation. It's the wrongful acts such as the misleading statement, the misstatement, the breach of duty, etc., which may have occurred in the past that triggers a claim after the inception of a new policy. The prior acts exclusion is much more difficult to deal with because the insureds, which should be understanding the application process, may not have any idea of what acts could have been transpired in the past which may give rise to a claim in the future. So, why do underwriters apply a prior acts exclusion to a D&O policy? Good question, and the answer is because the first new D&O policy is the starting point, and in order to make it affordable for the insured and profitable for the insurance company, the underwriter wants to only cover claims which technically start after the inception date of the policy. The opposite of prior acts exclusions is to have no retroactive date on your policy to grant full prior acts coverage. So that's a brief overview of the prior and pending litigation exclusion and the prior acts exclusion in a D&O policy. Thanks for watching this video. My name is Gordon Coyle, and if you are looking for help on D&O insurance or any other form of business insurance, give me a call and let's chat. No pressure, no sales gimmicks, just some conversation to see if I can help you and if we might be a good fit for your business insurance needs. I work in all 50 states, and I really love solving insurance and risk management problems and issues for business owners. My contact info is coming up, and there's a link in the description box below where you can book a call directly on my calendar. Thanks a lot.